All right, I really wanted to look at dividend players in the energy, oil and gas space. And I like that industry because energy's huge, and they're just pulling it out of the ground at a certain point. Once wells are figured out, they're just extracting. So oil companies, biggest in the world, some of the most money is in that space. But so I like it, but if you look at what oil prices have done over the last 10 years, say, right, and especially the last 5, because we had the 2019 and 2020, and Trump was president, and he got, it was a weird month, like April 2020, when oil went negative. But if you look at what the stocks did in that space, any oil, energy, gas type of those companies at that time, they got just slammed. So when the price of oil is going to affect the product so much, when the price of their product is oil, when the price of oil moving up and down because it's commodity, when that moves and it's going to affect the stock performance that much, I don't know that I like that. I've never really done a lot of energy companies. Usually it was like Exxon and Chevron, and I kind of like, as the dividends have become, I just watch the yield. I want to make like good yield. But if you look at how oil performed and then what the oil stocks do when oil rises and falls, you see it perfectly, basically perfectly correlated. If oil prices are taking a dive, where's my chart here? So if we look at, what's EPD? EPD is one of these larger ones. So they are Enterprise Products Partners LP, and this is the ticker is what are we on? EPD, EPD, and they're paying 7% dividend right now. It's a $2.06 a share dividend on a $29 price here. But this is what I mean. So when I see this, I see the run up here. Now, what was happening back then? If you remember 2014, that was like basically the war in Europe, Russia, all that stuff. Syria, I think that was the big thing. Oil was going crazy then too, right? Oil prices up in 2012, 2013, 2014. We were seeing some higher oil price per barrels. Interestingly, when you see this is just funny. I didn't see this or notice this before, but like, here's Trump's presidency. Basically, the entire time the oil price just became stabilized, bound between 25 and 30 about, right? And then we had the 2020 fiasco, where oil, they basically were giving it away. They were paying you to take it. It was just a wild situation because of that. But the tanking of all the oil stocks. This is EPD. Let's look at Chevron and 2020. Here they are, where Trump was president. Volatility, Russia, Ukraine, all this stuff driving the price of oil, right? And then let's look at ExxonMobil, XOM. These are big companies, right? Exxon is a $518 billion market cap, paying a 3.2% dividend. Chevron is a $267 billion company, paying about 4.3% dividend, $6.28 per share on a $145 share price, right? But yeah, so Chevron, Exxon, what were they doing in 2020? Just crashing when oil went down. They were pretty tight when oil was probably, stable in here, and then there's been this volatility. Now here's where am I going with this? Election year. November is in, this is August right now, August 2024. We got the election in November. That's 3 months. That's not a lot of time. I like the dividends that these energy and oil companies can pay. But the risk here is the volatility of oil prices. If what I believe a Trump presidency would affect the oil prices. That's the baseline thesis on why I think I'd probably stay away from the oil after kind of walking through and looking at this. This is my assessment on it, but I would imagine he's going to get the USA producing oil again. We're one of the largest. We have the largest amount, I think. I read numbers all the time, but I think other countries are extracting and shipping it out more, and for our regulations and things here, they've done less of that. But if he unlocks that ability for the gas and the oil industry to just go and make our country energy independent again, which we were before, energy independence, not buying oil from other countries, this is going to affect the oil prices, obviously, to the downside, because the market is going to be able to operate a little bit more freer. We're going to bring more supply. We're going to have our own supply. We're going to be sending out supply, I'm sure. Maybe not. Maybe we'll just keep it. I don't know. But I think with the oil prices, what you're going to see, you see a Trump presidency in 3 months, you're going to see oil price. You're going to see the whole market make a reaction. Number one, I want to talk about that in a different video. But oil prices are going to be heavily deciding the valuation on these large oil and gas producers and companies. So I really like the dividends you can get on some of them. These Exxon and Chevron are not attractive right now. 3 and 4% is nothing for that amount of risk, especially. But even EPD, Enterprise Products Partners, and I've got a couple other smaller oil, gas, and some. I think it was maybe I had a shale one somewhere. Small allocations because their dividends were nice. You could get a little extra return. But if the oil can have that much control on the profitability of the investment, the shares, to me, and I don't like it. It's just you're locking to commodity prices, and to me, that's a different type of investing, because you have to have a pretty good handle on where you think oil price, which is basically my thesis on this. Is I believe that we're going to have lower oil prices coming soon. I think there's going to be a reaction after election, and then I think there's going to be 4 or 5 years worth of, just like I saw. I got to look at what was the price of oil during those few years. That's what I should have pulled up. But if that's what the performance on the stock's going to be, and if basically we're greenlighting all the production of oil and things in this country again, price of oil goes down, so every producer will have less cash profitability if the prices are down. But also, if everyone's drilling, there's more supply, so then. But yeah, I'm gonna look at some other ones, and let me pull this oil up. Which one's the good quote? Oil, crude, WTI crude, right? WTI. So if we look at crude in 2020, right, where it was basically, was free. Oil was free in 2020, if you could get it. If you could take train cars of it. So here's Trump's presidency. Like I said, here's where oil was. It was between, what was it, looks like about 75 was the top, and maybe 28, not counting that COVID outlying time, right? But between 28, well, really a lot between 35 and 75. And it's been quite whipsawing since Ukraine and things. But I mean, even if it doesn't go much lower, do you think this range here that it's been in, with, like I said, like a Trump presidency, is oil gonna scream to $120 a barrel again? Chevron, all these companies, they're just gonna track along. And I think energy wise, in terms of transportation and what you see Tesla doing, there's still more of this electrification coming, and so you're not gonna get rid of the oil industry in another few years or anything, but it's a very old industry at this point. That was our big invention of energy and transportation and industrial revolution 100-something years ago, 150 years ago almost at this point. we have electricity now powering phones, cars, aircrafts, boats, everything's coming. So there's going to be a bigger wave there. And not like I like the mining stocks for like lithium or anything like that. I think generally like Tesla as a pure energy play, then an oil company is going to be the move there, as they get into more of the superchargers becoming gas stations. That's just for vehicle, so they're going to make profit on selling that energy. But then the storage and just overall like the grid that's changing in terms of how energy is becoming more from not necessarily renewables, but like the solar is going to be a big thing. I think that one's the easiest. The sun is everywhere. Wind energy doesn't. So yeah, probably worth looking into Tesla next. Been off of them for a little bit the last year or so. I think they had their moment, and everybody knows about Tesla. They're quite depressed right now. They're, I think, around $500 or $600 billion valuation. That's going to be the play for the energy and the AI and robots in general. Like, this is a company that, make no mistake, makes one of the largest one of the best-selling robots to consumers there is. Like, these cars drive themselves around. They're gonna update it one day with the software and keep unlocking features, and that's a subscription revenue of monthly, like $99 a month or whatever they're charging for the self-driving type of abilities, and maybe there's another thing, but that's where I like to look again, where things are going. These horizons, 20-30 years in the past, what was working needs to be rechecked for another 10, 20, 30 years, especially now. This is not 20 years ago investing. 20 years ago, I don't think anyone, period, was trading stocks online from home. I mean, you literally would have had to have a laptop and like a dial-up modem, or maybe you had, there was high-speed internet still then, but Wi-Fi was new. Wi-Fi was like, people did not have Wi-Fi in their homes in 2004. So investment strategies and the way technology has changed such a hockey stick of technological innovations and products that have come to market, and consumers, and the way that everything in the world is connected and networked, and we pay for everything on our phones now. This is all changed in 20 years, really in about 10. Like, the iPhone had its real kickoff moment. Everyone really got into the iPhone around 2012. It had been out for 5 years already. That was like the iPhone 4 or 4S in 2012. That was when the real uptick of people buying iPhones, and you saw a surge, and that became like, smartphones are here. Like, it's not some gimmick expensive thing. Like, we're still 10 to 12 years into the current like reality and internet and technological world that we have today. And this is the type of thinking that, as great as some traditional tried and true energy, oil, everything gets dismounted at some point, right? There was at one point a lot of blacksmiths in New York City fitting horses with horseshoes and fixing wagons and things like that. So some stuff gets to go away. Technology and things, these are the real players to make good investments over a lifetime. Every big win you've ever heard, if somebody has some big, it's like, oh, they had IBM back in 1980. They had Apple or Google in 2000 or something like that. So like, they're always out there. There's some name out there right now that in 10 years is going to be that Tesla type. Look at the, like, type of, where everybody loves to look at a chart from the longest amount of time, like 5-10 year charts. Like, wow, if you'd have bought it for $1, it today exists somewhere. I'm looking at companies. I don't know. This is not like a recommendation yet. I'll look into these soon. But what companies in the last few years created a whole new space? What did not exist at all a few years ago as a part of life, and is now almost, you could say, here to stay and still growing? It hasn't really hit that stride of acceptance and general way. And to me, something like that is as easy as saying DoorDashing and Uber. DoorDash the food to your house now. Everyone got familiar with that during COVID. and Ubering around, that's just been around enough, like, especially in like Miami, like Uber's, we don't want to be in traffic even. Sometimes we just Uber places to not have to park or deal with traffic. I think younger generations, you can comment or anything below, but it's just easier. Why pay for a car? Why have the expense, the liability, the insurance, the gas costs? You generally just need to hop around a little bit here and there, and splitting these costs with friends and things like that on rides. That's the type of stuff I'm looking at next. Uber, DoorDash, Spotify, Shopify, TOST, which is like a restaurant POS system, kind of like mobile ordering, and runs their whole register. And these are because these are companies I've interacted with in real life as a user in the business when they're using them. And the technology is near flawless. Now for me, that's huge because it has to work. Because the customer has to like it, the business has to like it, the platform has longevity in those cases. So like Uber app really works well. DoorDash, I think, is absolutely, possibly the best app. And the way that they're doing like conversion optimization, like they're showing you all these restaurants and food items and things, and they're putting it in a way that as you're going through, there's upsells, there's incentive, or what are those called, impulse type add-on to carts. Throw something you could, like, do you want something from Walgreens while they're bringing this food? They can grab you whatever else you might need, like little Publix or Walgreens items, other restaurants along the way too. So these are massive new convenience plays that have a high price, like DoorDash fees and things like that. It's not cheap to do, but if you value the time, it's incredible. We do it all the time. Saves so much time. It saves us 20-30 minutes a day for a lunch, hours sometimes in the evenings. DoorDash is going to be that type of stock, like I'm looking at, where a whole new way of living life exists now for us as a collective. You can send any restaurant delivery to your door. So like, you don't need to go out. You don't need to, spend your time to do that. Someone else is getting money in the economy in that new way too. So like, that's the way I like to do it, because the Dashers are excited. They have employment through there. So like, that company as a stock, their tech, their growth, it's technically, it's like software as a service type stuff. So scaling wise, they don't have a lot of costs. They don't have fixed costs that would be high for a software product. Like Tesla has to manufacture a car, like a whole car has to be made. That's thousands of pieces and components. Everything needs to get bolted together. DoorDash, they're going to be in this aggressive growth and market share type of aggressively getting market share over the next few years, and battling it out with like Uber Eats and other ones in regional areas and such. But that's where I like to look for those bigger players in the coming next big name. What in 10 years will be like that irreplaceable, oh yeah, we just Uber everything, we DoorDash everything, just like we stream and Netflix everything. Remember, 20 years ago, you went to Blockbuster. 10 years ago, you were definitely getting Netflix or Redbox. And now it's just through your TV or your phone or whatever at home most of the time. So you don't even need Redbox, you don't need to go to the DVD stand or Netflix. DVDs getting mailed to you even, right? I used to do that in college. So that's where I like to look, and I'll talk to you tonight.